If you're a professional, a business owner, or a long-term investor, this presentation should be of interest to you. By the end of it, you should have a better understanding of how you can preserve and protect your non-business related assets. Hi, I'm Gordon Weeb. I'm a registered underwriter in the provinces of BC, Alberta, and Saskatchewan. My practice focuses on helping clients meet financial goals and objectives, typically through the use of annuities. Over the next 5-10 minutes, I'm going to walk you through some ideas which you probably haven't heard before, but which could help you and your family preserve your wealth and well-being. Just before we begin, regulations require the following safe harbor. This presentation is produced and published on and around August 27, 2020. It may contain timely information, and it is meant for illustration purposes only. This is not an offer to purchase securities or products. No representation is made. Items presented here may not be suitable for everyone. Please note, rates and values change daily. Please consult an experienced qualified licensed professional prior to investing to ensure that your investments are a part of a comprehensive plan designed to help you and your family meet your long-term financial goals and objectives. When recommending products and strategies, broad tax and legal issues may be discussed. Nothing should be construed as tax or legal advice. Here's our agenda. I'll review my philosophy and principles. That way, if you don't like what you hear, we won't be wasting each other's time. Number 2, we'll look at threats to business owners and professionals. Number 3, we'll look at how we can reduce risks. Number 4, we'll look at options for deploying assets. And number 5, I'll review fees and expenses as a part of an action plan for reducing risks. Here's my approach and philosophy. When it comes to managing your family's wealth and well-being, I think everyone attempts to adhere to the 4 P principles. They are, number 1, preserve capital. Preserve capital by avoiding schemes, scams, scoundrels, and skullduggery. Deploy it in productive, quality assets instead. Number 2, protect your capital. Avoid frictional costs and things that can erode and hinder growth like taxes, sales, and administrative fees. Number 3, propagate capital. Leverage time and compounding over the long term. And number 4, plan your capital deployment so that it suits your goals and your family's goals and objectives. Now, having talked ideally about principles, it's probably worth noting anyone who's been in love, war, and business knows things don't always go according to plan. In fact, more things can go wrong than can go right. Let's review some of those threats to business. You can be sued for any number of reasons. You can be a dominant player in your field or profession and still fall victim to evolving economics and marketplace dynamics. Here are some Canadian companies that have fallen since I started my career some 25 years ago. In 2000, Nortel made up roughly 1/3 of the value of the entire Toronto Stock Exchange. Then only a few years later, they were in bankruptcy court. Okay, Bre-X was a fraud. And one last story about Canadian entrepreneur Izzy Asper, which he grew Canvas Global to be one of the principal broadcasters in Canada. That was until such time as his son Leonard took over, but never mind. Similar trends have occurred in the United States also. U.S. companies that once dominated the U.S. economy failed to adapt to changing market conditions and met with their own demise, like Lehman Brothers and Kodak. And Kodak used to have a virtual monopoly on film production. Here's another Canadian business story. Remember how BlackBerry dominated the cell phone industry? Well, we all know what happened there. Hindsight might be 20/20. It might also be a year that sees countless business failures. That is, thanks to a global pandemic that's made business planning far more challenging. And whether you're a health professional, a manufacturer, or a business owner, you'll invariably have been affected by the global pandemic. 2020 will likely be a transformative year for you and your business. So the question becomes, how can you best navigate the sea of change? A part of that answer might simply be to hold some of your non-business assets with an insurance company. Here's why. When it comes to preserving, protecting, and propagating your capital, holding assets under an insurance contract has advantages not afforded to any other investment class. Let's look at some of those advantages. First, there's a maturity guarantee. When your assets are held in a contract, otherwise known as a segregated fund, They include a maturity guarantee that you specify, either 75% or 100%. It guarantees you receive a minimum value for your funds, regardless of what the markets are doing in 10 years hence. And should you not survive the next 10 years, your spouse, children, grandchildren, or whomever you designate as beneficiaries will receive the greater of the market value, or 75% or 100% of your principal investment as designated by you when you sign the contract. Your beneficiaries may lose you, but they will receive your principal investment. There's more. When your personal and business assets are held in your name, once you've started negotiating with St. Peter, all your assets are frozen, and what happens next depends on whether you have a valid will, a valid shareholders agreement, and the size and complexity of your estate. It will then need to be probated. That's the public legal process for assuring all claims against your estate are cleared prior to your assets being dispersed. When assets are held within an insurance contract, they bypass the probate process. Proceeds flow directly and confidentially to your designated beneficiaries. That process should take about a week or two. When your assets are held outside of a contract, it could take over a year to distribute those assets according to your wishes. Legal, administrative, taxes, and probate fees will need to be levied, and it will take time for that capital to find its way to your intended recipients in a very public process. And if you live in the province of British Columbia, relatives could challenge your will under the guise of the Wills and Variation Act. That doesn't happen under the terms of a contract with an insurer. There's one last benefit conveyed upon our partners that isn't available with other investment vehicles. And these days, it's key to helping protect your family's wealth. In 1996, the Supreme Court of Canada afforded contracted assets or segregated funds creditor protection when A, they're governed by an insurance legislation, B, a preferred class of beneficiary is named, and C, there is no evidence of a fraudulent conveyance, a legal term meaning you haven't attempted to deliberately hide assets from creditors or prospective creditors. Under the terms of such a contract, you can preserve, protect, and propagate your capital by allocating funds into savings accounts, term deposits, and other fixed income assets. You can allocate a portion to large Canadian companies and other stock equities, or you can allocate an amount into partnerships with property owners managing prime Canadian real estate. Now let's turn to fees and expenses. For all the security and estate planning features, benefits, and advantages, we're able to deliver guarantees and underwriting at rates comparable to what a property manager might charge annually for the maintenance and administration of a property. So let's review. If you're a professional, a business owner, or even a long-term investor, you're susceptible to countless risks, potential liabilities, ground-shifting economics, and global pandemics. However, you can significantly reduce the risk to your family's wealth when you hold your assets in a portfolio contracted with an insurance company. And that's it. If you have questions or would like further information about how you can preserve, protect, and propagate your family's wealth while reducing risk, please contact me, Gordon Weeb, by email at gord@think-income.com or visit my website, www.think-income.com. Thanks for watching, and if you found this presentation helpful and informative, please give it a thumbs up down below, or consider subscribing to my channel or even watching one of the other presentations. The links are also down below. But most important, please remember, stay safe, stay sage, and stay well.